Okay, in this video I'm going to talk you through how to complete a cash flow forecast. The cash flow forecast will be using this scenario here, which is also available as a link from the website, and you need to read this very carefully and decide which information is relevant and how you're going to use it. So let's have a look at the blank cash flow that we've got to start with. It's a little bit small, so if I just zoom in, and what I'm going to be doing in this, I'm not going to do the whole 12 months, I'm going to do the first 2, maybe 3 months, and then leave it for you to complete the remaining months of the year. Also on the task, we've also got, if we just scroll down, task 2 to complete. Now task 2 asks you to look at 2 scenarios, scenario 1 and scenario 2, and I will be leaving that for you to complete. I'm just going to show you maybe the first 2 or 3 months for task 1. Right, let's get started. So what I've done on this cash flow forecast is I've put the months of the year across the top there, and if I just scroll across you can see it goes all the way up to December. And we've got it split. So the first half of the cash flow forecast looks at what your inflows are. Sometimes it might be known as income or receipts, and you need to be familiar with these terms so that you're not caught out in the exam. And we've got a space here to add up what all the total income is for January when we get started. We've also got the cash outflows, and we can add those up at the end as well. We have a space here for net cash flow, and in this cash flow forecast the opening balance for the month is down here at the bottom, and then the closing balance is underneath as well for that month. It could be that on some the opening balance actually appears right at the top here of the month, but don't let that confuse you, just be aware of it that it could be the case. Right, let's take a look at what we need to include. So starting with Flower Sense, we are told that they want to get a £5,000 bank loan, and they already have £5,000 of their own savings. So the opening balance is going to be £5,000, that's their own savings. So I'll scroll down to here and I'll just type in £5,000, like so. I'm then going to come and have a look, just double check this as well. Now they're going to get, hopefully, they're going to get a bank loan for £5,000 as well, so that will come in as a cash inflow in that first month. So if I go back to here again, I'm going to put it on this second row here, you'll see why in just a second. So the loan is going to be £5,000, like so. Okay. Let's go and have a look at what the income is going to be from selling flowers in the first month according to their predictions. Well, if we read it, we think, or they think rather, that they could sell an average sale value of £5. So each bunch of flowers is going to go for £5. So how many are they going to sell in January? Well, the market research, which questioned 100 adults, showed they would eventually get £2,000 per month. Okay, now the key there is eventually. That's not what they're saying they're going to get in January. And they acknowledge that it's going to take some time to reach this level of sales. So what they think they're going to do here, they forecast that they will begin trading in January with a level of 900 orders. So if they sell 900 bunches of flowers in January, and each bunch of flowers is £5, the answer is going to be, well, if we multiply those two together, the sale from flowers is going to be 4,500. So 4,500. And I'll just call this receipts, or it could be EPTS. Okay, so receipts is going to be 4,500. That's how much they're going to receive. Now, if we add these two together, that tells us that their total income in January is going to be 9,500. So there's the first bit of the cash flow forecast completed. We now need to have a look at what their expenses are. So let's go and have a look. Now, the expenses, you know, can be split into fixed and variable costs. Let's have a look at the fixed costs first of all. These are all listed here, and because these aren't going to change, I could put this across the whole cash flow. So rent is £700. Let's go and get that in. So rent is £700. And the next one was wages for £500. Okay, so we'll put that in there. Wages, £500. Whoops, I'll put the pound sign in. The next item is going to be heating and lighting, £200. So heating and lighting, £200. And the next one, insurance of £160. Insurance is going to be £160. What else have we got? loan interest of £40 and personal salary of 40. So loan interest of £40. So loan interest £40, and their own salary, which they can also call drawings. It's how much they're going to draw out of the business for themselves. The salary, I've forgotten what it was already. Let's go and check. £400. Okay, so put that in there. Whoops, not dollars. £400. Okay. Now there are other things that they need to pay for in January, as well as all their fixed costs, and that's going to be their cost of sales, because they don't get the flowers for free. So let's go and have a look at how much they're paying for it. It says here their variable costs should be £3 per order. Okay, so if they're going to sell what they predict is 900 bunches of flowers, we need to work out what is 3 times 900, which is, well, if you go to 3 times 9, you know that's 27, but obviously it's not 27, it's going to be 2,700 once you've added the zeros on. So we'll go and put that in. We'll call it variable costs. It could be called cost of sales as well, because it's how much does it cost you to get that to sell it in the first place. So we'll put that in, 2,700. Now there's one more thing, one more cash outflow in January. Now you have to read this very carefully. It's in this paragraph here. They would also need to buy equipment for the shop, which would cost them £8,000. It's a large amount, so they decided to only buy the essentials to start with, amounting to £5,000 in January. So they're also going to be paying £5,000 in January. And if we look at this, this is important, the rest is going to be bought in July when they're more established. So in January they're going to be paying £5,000. So we'll call that machinery or shop fittings or whatever it was they called it. And in January that was going to amount to £5,000. Now it might be an idea at this stage just to go through to July, which is when they're going to pay the rest of it. So £8,000, they've paid 5, so they've got £3,000 to pay in July. So it might be an idea just to find July, which is this one here, and the machinery there is going to be £3,000. That way you're not going to miss it out and mess up your cash flow forecast. Okay, so all we need to do now is add up their total expenses, which comes to £9,700. £9,700. Okay, so they start the month with £4,500 receipts. That's how much money they bring in from the sales of flowers. They also get a loan from the bank of £5,000, so their total income is £9,500. Their total expenses for that month are £9,700. Now straight away we can see that their cash flow is going to be negative, because there is more money going out than there is coming in. So that month the net cash flow is going to be minus £200. Okay, now on some cash flow forecasts you might not see a minus sign, you might see it written like this in the brackets. So that's all that means. If you see it in the brackets, it means it's a negative amount. I will just stick with the minus sign for now. In the exam they might provide it either way. Okay, so let's have a quick look at this. We've got one more to complete, the closing balance. So what is the closing balance? Well, what we do is we take, to work out the closing balance, we take the month's opening balance and we add on to that the net cash flow. Now in this case we're adding on a negative amount, and you'll know from maths that when you get an add and a minus, it's a minus. So £5,000 plus minus 200 actually equals 4,800. So their closing balance for that month is £4,800. And what happens with the closing balance is that it becomes the opening balance for the next month, and that's the case all the way across. So I know straight away that the opening balance for February is 4,800. Now to start filling the rest of this in now, we just simply need to go back to the scenario. So what are February receipts going to be? Let's have a quick look. So if we read the cash flow, it says they're going to get 900 in January and it's going to increase by 100 every month. So it's going to be 1,000 that we're dealing with. So we know that it's going to be 1,000 times whatever it is they're selling the flowers for. And I've forgotten already what they're selling the flowers for. I think it was it £5? Yeah, there we go, £5,000. Okay, so it's going to be £5,000. So I'll just put this in for you. £5,000 £5,000. Now they don't get a loan this month. That's the only receipts they get is the £5,000. So that's quite easy now to do as the total income. Now, all these outflows, because all of these are fixed costs, they're all going to stay the same. So I can just copy this across and paste it in. Oops, where are we? There we go. Paste it in like so. Okay, the formatting's been thrown a little bit, but we can soon sort that out. I'll just use the format painter to track that down. Okay, there we go. Right, and the positioning isn't quite right in the cell, but that's the minor thing. The figures are correct. Now, the variable costs are going to change because they've sold 1,000 flowers. This is 1,000 bunches of flowers, and each one of those was costing them £3. It tells you that in the scenario. So the variable costs are going to be £3,000, like so. Okay. There's no machinery to pay for in January, so all we need to do now is add up this and find out what the expenses are, which comes to £5,000, I believe. So I'll just stick that in here. £5,000. And now we can go and calculate the net cash flow. So if they've got £5,000 coming in and they've actually got £5,000 coming out, this is an unusual scenario where it's a zero cash flow, £0 cash flow. So we know the opening balance is 4,800. So what we need to do is add on to that the net cash flow. So 4,800 add nothing, it actually remains the same, 4,800. 4,800. The closing balance becomes the opening balance, like so, and the whole process starts again. So I'm going to leave it at this point. You will need to go and read the scenario, see how many bunches of flowers they sell in March, multiply it by their selling price. There's no other income that they get, so whatever appears here as the receipts will be your total income here. You know that your fixed costs are going to stay the same. The variable costs will change. You're going to be multiplying however many flowers they sell by the variable costs of £3. There's no machinery to pay for, so then you can work out the expenses. You can then work out the net cash flow, add that onto the opening balance to see what your closing balance is, so on and so forth. And eventually you'll have a complete cash flow forecast for 12 months of the year.